What's up guys, Eric here, Mr. Fired Up Wealth. I'm gonna drop a new series today. This is the first video. It's gonna be on dividend growth investing, specifically a term that I invented, DGIF, dividend growth investing for fired. What I'm gonna do in this video is give you a quick 1-minute overview of what DGIF is all about, and then we're gonna jump right into the first stock. Now, if you like this kind of thing, if I make a couple of these videos and I'm seeing there's likes and comments, interaction, there's view, watch time, watching the whole video in its entirety, I'm gonna make more of these, so definitely engage with this video and I will bring more DGIF stocks. If you follow me for a while, you know I like to have a blended portfolio with ETFs, with what I call DGIF, growth stocks, cash, spec, and so on. I'll be dropping a new portfolio, how to build a growth portfolio for 2022 very soon. So definitely subscribe and look for that video as well. So DGIF, that's dividend growth investing for fired. So this is looking for total growth, not just growth of the dividend. So you think of traditional DGI, that's dividend growth investing. You're generally using that for income, maybe for retirement to get passive income, and you're mostly concerned with the dividends increasing more than anything else. With DGIF, we want total growth. So we don't want growth of the dividend, but we also want growth of that stock price, that share price. So there's really 5 criteria. And fired, again, Fired Up Wealth, financial independence, retire early with dividends. DGIF, dividend growth investing for fired. So 5 criteria we're looking for, primary criteria for DGIF. You want 3% dividend or less in most cases. Dividend payout ratio, you want that low, 50% or less. The reason for these, you want the company to have enough money to reinvest in its business for growth. So you don't want to be paying all the money out in dividends and distributions. You want 5 years of dividend growth or more. The more the better on all these, of course. At least 10% growth in that 5-year period, the more the better. And you want 10-year annualized growth of at least 10%. So 10% annually with the dividends reinvested per year. Those are the 5 criteria that you're trying to look for. So that first stock I'm going to cover today is Tractor Supply Company. If you've not subscribed to the channel, subscribe so you see all the videos. I'm willing to do 10 or so of these videos if there's interest in it. So definitely subscribe, hit the like button, drop me a comment, let me know what you think. So Tractor Supply Company, I own this stock. This was a Discord buy, Fired Up Wealth Discord, sometime late last year, I think around September. And I added some along the way, dollar cost average. I'm up about 65%. If you look at this, you can see the dividend yield is less than 1% at 0.9. It's got that nice low dividend payout ratio we're looking for at 26%. Dividend growth, you've got 16.72 on the 5-year average. Now the total return 10-year annualized is a little bit lower than I'd like it. You want that to be 100% or more. This one's a little bit less at 93%, but it's been growing rapidly over the last several years. And I think they have nice momentum heading into 2022 and beyond. This is really going to be a long-term investment, something you're going to hold for several years. So this is considered on Fidelity a mid-cap, but it's $26 billion. You can see the PE ratio is just under 30 on this. 52-week performance, it's up about 57.5%. I'm up a little over 65% on my total position just through dollar cost averaging. So let's dig into this one and see what it's all about. So this is a slide from their last earnings, updated full year 2021 outlook. What I really want you to focus on here is that they're growing at a healthy clip. They're doing it organically. And the thing I really wanted to point out here is the share repurchases. So 750 to 800 million shares being purchased back in 2021, also growing their dividend. And I think that will continue in 2022 and beyond. So I'm going to give you some bullets of why I think this is a good investment, long-term investment. The first one is really, I want to talk about the locations. So if you live in a bigger city, you might not know much about Tractor Supply Company. What I like about Tractor Supply Company is their locations are kind of like in the 3rd tier suburbs. So you think of like Minneapolis, St. Paul, I lived there for a number of years. You've got your Home Depots and your Costco's closer to the cities and the bigger suburbs. And the Tractor Supply Companies, as you get to those fringe, those kind of 3rd tier suburbs, you see more of those. Why I like that is you've got the rural folks that can drive in closer to the city and not have to go all the way in the city because they don't like driving in the city. You also have the people that live in those tier 2 suburbs that can easily drive a little further out to tier 3 to go to Tractor Supply Company. So they don't have as much competition from the Home Depots, from the Lowe's, from the Costco's and whatnot. And it really has a niche audience, more so for the people that aren't urban, that still have good incomes. We'll talk more about the demographics, but it's really interesting. So secondly, they are growing their online presence and sales at a really nice clip. So the online presence, I think, can expedite their growth even more because you don't necessarily have to be next to a store to order it online. And they do have some niche products that they sell and that they carry. And they've they've got some price advantages in certain things as well. They're growing at a really healthy clip and they're doing it organically. Now, pet care, guys, this could be absolutely huge for Tractor Supply Company. So you think of Tractor Supply Company, you might think first of tractors. Some people might think of horses. You think of farm animals, but they've really expanded recently outside of that. After 80 years of serving farmers and ranchers, Tractor Supply has a new target, pet parents. And as you know, that's a big deal, especially with younger generations right now. More and more people are pet parents, okay? Online prescriptions and on-demand vet advice cater to digitally savvy owners. So you might look at Tractor Supply Company and think they're going for a mature audience, but their growth and really what they're targeting, and they're using analytics as well. I'll talk about that here in a little bit. They're trying to go after younger people that are making decent money, that are digitally savvy, that are maybe pet owners that want to buy pet products online. You can see, so Pet Vet is who they partner with. And what I wanted to point out to you here is that they have 1,600 retail locations. So Tractor Supply Company has this partnership with Pet Vet and 1,600 retail locations scattered across the United States. So this is right from Tractor Supply Company's website, how to order your pet's prescriptions online. So you see dogs, cats, it's not just farm animals anymore, and free delivery for orders over $49. And we mentioned this earlier, but increased buybacks, so buying shares, and dividends. And there's going to be probably an increase, I'm hoping so. So Tractor Supply Company will provide an update on its dividend in late January of 2022. Now, a year ago, they increased their dividend by 30%. So last two, listen to these. $13.25 billion, 2022 estimated sales, and they're expected to grow their EBITDA by 10% as well. So this is important. And the reason it's important is they're really targeting specific audiences and they're doing a good job. So they're partnered with Microsoft. So this quote in the middle is what I want to read to you guys. As Tractor Supply is committed to providing legendary service to our customers, this partnership with Microsoft to enhance our analytics platform will deliver insights that help us better understand our customers while offering products and services that truly meet their needs. We believe that this collaboration with Microsoft will help drive innovation and stay nimble when responding to market changes and our customers' ever-evolving needs. So you might think of Tractor Supply Company as this boring type stock that just has tractor supply parts, right? Parts for your tractor if it breaks down, but it's a lot more than that. And these guys are using cutting edge technology with Microsoft Azure to really ensure that they have the best analytics so they can understand what the clientele is that brings in the most revenue, what they like to buy, and they can give more of those products to those shoppers. So the title of the video, the next Costco. So Tractor Supply boasts 22 million loyalty members. Of course, this is a much smaller version. You can't compare it necessarily to a Home Depot or Costco. Now, I do want to point out that I've been an investor in Home Depot and Costco for many years, and I see a lot of similarities with this company and kind of what the niche and what they're trying to do. So it reminds me a lot of a combination of a Home Depot and a Costco, maybe 10 years ago. And I think Tractor Supply Company has a lot of room to grow and to run. But listen to this, 22 million loyalty members, many of them young and spending money. Tractor Supply is opening new stores and gaining new customers. The retailer ended its third quarter with 12 new namesake stores for a total of 1,967 stores in 49 states. That's pretty big, probably bigger than you were expecting. It also added more than 5 million new loyalty club members this year, according to TSCO Research Group, for a total of 22 million. Now, those 22 million members, they spend about triple of what non-members do and account for about 70% of the sales. That's driven by those analytics we just talked about. In Q3, the number of high-value customers in the program grew almost 30%, and the retention rate continues to top 95%. Now, this is massive, and you might be really caught off guard. Most of Tractor Supply's new customers are aged 18 to 45 years old, typically a higher spending group, according to the research again from TSCO Advisory Group. So these are young people, 18 to 45 years old, and they're high spenders. Now with COVID, we know that a lot of people moved outside of the city, and a lot of people think that that might come back. But I think there's some stickiness there too, where some of those folks moved further away from those urban centers. And it's very possible that they will enjoy that rural lifestyle. The grass is always greener. If you grow up on a farm in a rural area, oftentimes you want to go to a big city. If you grew up in a big city, you want to go to the middle of the Midwest, the middle of nowhere. I live in the middle of the Midwest, and I tell you that these stores are gaining traction in my area, and not just in my area, but everywhere around. If you look at the locations of where these stores are, just where they're located and where they're built, It's very strategic. These guys are smart. They're smart and they know exactly what they're doing. Now, if you compare the demographics to Costco, there's a lot of similarities. So Costco's target market is middle to upper income, so same as Tractor Supply Company, often educated customers. And you might think, oh, these people that live in the rural areas aren't educated. Most of the people that I know that are farmers, I went to college with them and they have degrees, okay? So they're educated people, they're smart people. Now, Costco's gonna be a little bit different perhaps because these people are working in management, medicine, finance, law, IT, and government. And a lot of those people probably you could argue that are going to be in more urban environments. But again, Tractor Supply Company, they like to build in those third tier suburbs where a lot of these people we're talking about here, they're still able to access Tractor Supply Company. So when I think of Minneapolis, I used to shop at Costco, I used to shop at Home Depot, and I used to shop at Tractor Supply Company. The Home Depot and the Costco were really close. Tractor Supply Company had to go a little bit further out. So this is maybe slightly different when you compare Tractor Supply and Costco, but this last sentence here, Costco's market, they're usually not focused on gender or ethnicity, but it does target people that are age 30 and above and have their own families. Now, it doesn't talk about families, but I would argue a lot of the people in that 18 to 45 range, a lot of them do have families, but this is 18 to 45, so maybe a little bit younger demographic at Tractor Supply Company, which you might be surprised with, but at the same time, Costco, you're not gonna go to Costco if you're single and you're 20 years old, probably, right? More than you're gonna need. Most people that live near Costco, that has a family, you've got kids, whatever, it's gonna make sense to go to Costco. And most, upper middle class families and even wealthier families that I know, they shop at Costco. So it's comparable to Costco when I looked at Tractor Supply Company and Costco in a lot of ways. Tractor Supply Company is kind of a rural version. And I would say again that it's kind of like a marriage of a Home Depot and maybe a Costco together. Because Costco, you think really of food. It's really using the loyalty members. Now, the loyalty program for Tractor Supply Company doesn't cost money, whereas Costco it does. So Costco has that money coming in like a subscription. But when you look at this, I'm gonna show you on your screen here, look at this. You can see the loyalty plan. It's pretty favorable in terms of what you get and what they offer. So, and why they really like it, of course, they're giving you a little bit of a discount. But what they really want, guys, they want the analytics. They want the data to know what you're buying so they can target specifically to you. They can market specific to what you're gonna buy. Okay, so this is gonna be a series, guys. I'm gonna do more of these videos. Drop me likes and comments. Let me know what you think of Tractor Supply Company. In terms of the stock price, I liked it a lot better when it was 140 when I was buying it. But with that said, I think there's a lot of room for it to grow. It's trading close to a 30P ratio. I would personally want it to come back maybe a little bit of a pullback, and I would dollar cost average into this. So it did have it had a monster 2021, but I do like this thing long term. I showed you some reasons of why I like it, and I'm going to show you more stocks that fit into this DGIF total growth category, but I need to see support on these videos. So like, comment, make sure you subscribe to the channel if you haven't, click that little bell to get notifications. I appreciate your time and attention. Hope you have a great rest of your day. Take care.